Okay, hello traders. Today is Thursday, February 19th, and I'm Michael Boutros, currency strategist with SB Trade Desk here for this intraday strategy webinar. Good to be with you, Petro. Thanks for the confirmation there on the AV. Guys, we are about to get in just 15 seconds the weekly jobs claims. I want to bring that to you live as it hits. And here's what we're looking for. A print of 290,000 off of a previous read of 304. 2 seconds. Survey says 283. Continuing claims rises just a tad beyond expectations. So again, initial jobs claims a little bit lower than expected. No revision to the previous week. Not typically a major market mover, guys, but on tap here nonetheless. Just below that, you do see the dollar indexes, Dow Jones FXCM dollar index. We continue to be watching, guys, the same formation still in or still guiding price action, though. So we continue to hold that lower median line parallel. Again, this dates back to the July lows, so we know we haven't really gotten even a test of either of the extremes here, aside from the initial one back in October. So keep in mind, this low is also pretty darn close to the monthly opening range. So again, before we start to get aggressive on any type of corrective dollar play, this is something I've been watching and will continue to watch for confirmation on that. All right, and again, those claims a little bit better than expected. Heading into the rest of the session, you're pretty quiet until 10 o'clock. You did get the Philly Fed Business Index, and leading index should be a non-event there. All right, so let's jump into the scalps we've been following on the intraday page on SB. I have a couple of other setups here that I want to talk about real quick. As always, guys, in these sessions, I do want to encourage your feedback as well as your trade setups. If you want to talk about a specific pair, anything strategy-based, there's no faux pas. Feel free to throw out any questions that you guys have. So let's jump right in. Before we do, one quick look, something I like to take a look at every morning. Here's what the relative performance looks like so far of the greenback versus all its major counterparts. So you can see that it's a broad dollar story here today. FOMC minutes, yesterday weren't all that hawkish. So it's surprising. Initially you saw a little bit spike of dollar weakness, but that was quickly paired. And here we are. Okay, so again, not reading too much into all the chatter, not reading too much into all the fluff. A lot of people will say, listen, those minutes came out a little bit more hesitant, but that was ahead of that really strong NFP number that we got. Listen, we're not going to sit here and try to, play semantics. At the end of the day, we're trading price. We just need to be aware of when these event risks are on tap. But certainly it's not going to affect our outlooks from a trading standpoint. So just wanted to bring to your attention, Swiss franc worst performer on the day. The com block having a pretty tough time here too. CAD down 0.59%, Aussie down 0.38, and even the Kiwi down here with about a third of a percentage point to the south side. A quick look at the equity board looks like this. You're seeing equities in Europe mixed on this session, but broadly higher. DAX is still just popping in and out of negative territory all day long, still down a fractional percentage here, but you do see the IBEX 35 up 0.46%, CAC 40 France's market up 0.49. We did get some data earlier today from France. Here's what that looked like. As far as the CPI numbers, pretty much weaker across the board, and you're still seeing that market is higher in trade so far today. That's a quick look at the backdrop that we're coming into this session with, guys. Here's what we've been looking at. So obviously the sterling has been in focus since last week. This is where we left off yesterday at 5 p.m. right after the close. Listen, 154.73, 154.66 is still the major key resistance target we've been talking about. I'll bring your attention real quick to, first of all, the daily chart, 54.79 being an exact 236 from the decline off the July highs. Also the exact low, okay, for 2015, specifically December 23rd. So a little bit of a resistance region here, not surprising to see some pullback. We have made it technically through the weekly opening range, but remember, guys, nothing is static. So just because the opening range for the week breaks to the upside, if there's resistance there, okay, it's still something that you're going to want to take into consideration. So 54.79 might give us some more kickback. Here's what the intraday chart looks like. You got some divergence as you came into this high. Didn't really have a very nice trigger break. I was looking at this last night. I'm not sure why it's not here. Got 3 tags on it. Inevitably, it would have broken. The good thing about this is actually the open of the European opening range. So the European opening range broke with a move below 54.30. And that puts you on a little bit more of a south side trajectory as you head into the U.S. session. Long story short, guys, the formation that we're in is still very, very clean. Okay, this is just a big, big, beefy region of resistance. If we do pop through this on the daily chart, you'd be looking for that rally into the median line bisector. All right, right now that comes in somewhere in the range of, depends when it happens today. You have a target 55.30, which would complete 100 off the low. But you're looking somewhere around 55.60, 55.70 here. So we're going to use this near term as our bearish invalidation level. And as long as we stay above this lower median line parallel, we'll be looking for long triggers and momentum. We'll be looking for pullbacks and momentum to hold 40 support. Remember, since the start of the week, guys, the momentum signature just turned constructive. Here's the Sunday open, 60 hold, 60 hold, little peak above, right below 40. That's a bearish profile. This break above 60 and push into overbought begs a hold at 40 here. So if you get a long trigger break after this 40 hold and a push through 54.70, you're looking for 55.30, you're looking for 56 here on the pound. Any questions on this? You still have some pound data on tap. Don't forget, tomorrow you do get retail sales data in the morning. We're looking for a contraction of 0.3%. If you strip out autos year on year, you're still looking for a healthy 5.9. That's an uptick from the 4.2 we got the previous month. So that will be on tap tomorrow morning, depending on where the pound is. It could be the catalyst we need to get through 54.70. To try to press into that 55.30 level. At the end of the day, we'll continue to save our bullish invalidation level at 53.68. That's not changed from last night's setup. All right, so if we do break below this, we're going to invalidate that long side bias and look to play that correction to the south side if we get through the weekly opening range low. Any questions on the pound? Guys, I know it's been slim pickings. The market, will go into these little lulls where you don't have too much volatility. I know even on the swing side of things, it's kind of slim pickings right now, but as we get deeper into the month and as we open up, or as we head into the calendar close, I think you start to see things pick up a little bit. Any questions on sterling before we move off? Lubna, I'm assuming you're good on that. All right. Moving right along, yes, Lubna, we will take a look at the Aussie dollar. We've also been tracking that one on the page as well. Okay. Really clean. The range has refused to break out, but it is really clean. So here's what the scalp looks like now. Let me just move this around for a little bit. From yesterday's report. So look, the weekly opening range did break with the move above 77.90. So we were looking to buy into the pullbacks of the opening range high. We talked about this yesterday just as this thing was trying to crack back below the initial opening range high. That one held. Obviously, the minutes gave you that popped right through 77.86, right back into the opening range, or right back into the 78.30, 78.25 resistance level, which was capping the advance all week long. In overnight trade, you did get a fake out here to the open of Asia Pac. I was actually very inclined to take this position, but I just couldn't find any type of trigger that'll help me, that would give me a little bit more of a conviction breakout here. So hindsight's 2020. Obviously, it's a good thing I didn't take it. This thing turned around pretty quick and right back through 78.86 invalidates the long side of the trade near term. Okay, so I'm no longer looking to buy pullbacks in the Aussie. I'm actually pretty neutral here. If you look at the daily chart for Oz, and let me just take a quick look. There's no more data on tap this week, right? No. We're pretty quiet until next week. So if you look at this on the daily chart, I was personally looking for a run back into this long-standing median line from the October 2013 calendar year. That, like I said earlier in the week, guys, coincides with the opening range high for the month. We're around 78.70, 78.80. We didn't get it, so the trigger wasn't there, couldn't jump into the position. Like I said, it's a good thing we didn't because the thing crashed pretty hard. But right now, you're pretty much slightly higher on the entire week. All this chop action, and we're right back in the initial Sunday, Monday opening range. So my focus has started to shift away from the Aussie, guys. I do think you get a great play into this when you finally clear the opening range for the month. I do think you get a nice, decent either rebound into like 80.38 or the subsequent breakdown again. If we do break the lows, there's a long way to go to the downside. So I'm going to sit tight on this. I'm not going to sit here and try to, press this chop. But that's what we're looking at so far for the Aussie. Remember, the opening range low for the week is still 77.46, and that's really what you need to see break before you start to get back on the south side of the trade. Lubna, does that make sense on Aussie? Says yes, thanks. All right. So sometimes you get the plays, sometimes you don't. The crosses have been exquisite. I put out a piece on Daily FX, and I updated you here on SB for the sterling yen. Nice wide range scalp, and that's one thing I like to run into, guys. When you get the market lulls that we currently fall into here, it's better to run into the pairs that give you the wider ATR ranges, because even on a slow-moving day, you'll be able to squeeze out 20, 30 pips on that type of trade. So if we're looking at the sterling yen quarter, the daily ATR is still 50 pips. The setup highlighted yesterday looks like this. Okay, here's what the daily looks like, and the basic premise of the whole idea here, guys, is that we're heading into a major resistance target. That level is basically defined by 84.26 into the 84 handle. You have the R1 monthly pivot. We went over this yesterday in the webinar, if you guys remember. You got the 618 here off the highs from last year. This is a long-ranging 50% retracement from the 2007 highs. Nice pivot in price. Boom. It's holding the advance so far. Okay. So the one thing that we wanted to note here as well is that momentum coming from a bearish signature, right? Since that peak that we made in December, you saw multiple holds at 60, multiple breaks below 40. And for me to really confirm a broader reversal in the trade, we do need to make our way above 60 here on the daily chart. Okay, so as you look at this sort of just objectively on the daily chart, you're looking against that resistance region on the immediate near term. Obviously, guys, as I told you before, this is my trade of the year. I do think you get a lot of upside here later into 2015. But that being said, near term, you're at resistance. Okay, the punch through 84.30 is going to be great. I think you run right into 86.34 is possibly an initial target after the 85 handle. But right now, longs are at risk below this region. So here's what the scalp looked like since last night. As I said in the accompanying video, we were holding a short from this break here. It was a really nice clean break of the U.S. opening range, right? So here's the 8:30 open for U.S. equity futures. There was the break right after the open. It happened on the FOMC release at 2 o'clock. Nonetheless, objectively, it was the break of the opening range. The opening range break was accompanied with a nice trigger and momentum. You're looking for about 50 pips. Okay, the decline from 83.77 came right into the 83.20 support level. So you just squeeze that out. I sat in this for a while. I took off half the trade and sat in this for a while, trying to see if we can get the extension to the downside. I kind of just bailed out before I went to sleep last night. So another opportunity, an overnight trade here. It came right back into this region, momentum holding back at 60. Before you start to get aggressive on the south side, we do want to finally make a dip into 40. That said, you don't want to be long unless we break through this 84.30 level, 84.25 level here. So I'm a little bit less inclined to take a break of today's opening range. I would like to take it if we get a break below 83.20. Again, this was the initial opening range high, right? That play would open up targets at 82.60, and then right at the opening range low for the week, 81.60. The major key support, and the one thing I do want to take just a quick note, guys, is although we're trying to play against this resistance region, this is our bearish invalidation level, right? The broader trend is weighted to the upside. So we're not really going to be trying to get too aggressive on the shorts here. Remember the nature of the strategy, guys. So we're still within the confines of this really well-defined, nice ascending formation. If anything, and you do get a little bit more of an extended decline, I would only be looking to play this on the extreme back into 80.84, 180.90, this region here. Keep in mind that you have the lower median line parallel there as you close out the week. And I think that would be an opportunity actually for us to start looking higher back in sterling yen. All that said, this thing pops through 84.26, guys, forget it. Look for 85, look for 86.35. All right, and we'll get the breaks. We'll get them. It's just it's been a slow burning week here, but I'm sure these things will start to pick up. Any questions on the sterling yen setup from yesterday before we move on? Okay. So, Chintan, I see your question. I just want to get through the last couple of setups here, and I'll definitely jump into the sterling key. We talked about that one yesterday, right? I still like it, but we'll take a look at that in a moment. So that was sterling yen. We covered Oz. That's a no play right now. Sterling dollar is fighting against 54.75. And that brings us into the last couple of setups that we featured here. First of all, gold. There's actually a very interesting setup in copper, too, I want to talk about. But right now, gold, huge support region. Huge support region. Do you guys remember, for those of you who were in the webinar yesterday, do you remember what the entry was that we said we'd like to be on the long side for gold? It was right here. 195 into 198, 197.80. The low, okay? Where's my... Oops. The low is 1197 on the mark. On the mark. And that rebound saw a huge quick upswing, right? Right back into this huge, huge inflection range. So, my appetite for the long side on the immediate from a scalp basis is done. The appetite for the long side, as I noted in yesterday's piece, was only into this range into 118, 125, okay? That's really, for me, the near-term bearish invalidation. So only a break above that has me looking at 1240 at this point. But as long as we stay below here, you don't want to get too aggressive into longs. I do favor longs into this region, okay, but not beyond until we break through. So I think this was a beautiful entry. If some of you guys caught that yesterday after the webinar, it was immaculate. It was a perfect right bounce into support off. This is still the major bullish invalidation level at this point. 1195 into 1198, 618, simple 618 off the November low, simple 1618 extension off of the 2015 highs, and that's your rock solid support. Just below that, and something that's going to add conviction to a broader turn in gold, would be a break below this basic trend line here. Okay, I do think you possibly see some chop here for the next couple of days, maybe even a recovery up into 1240, but not really interested in pressing shorts unless we get back below the underbelly of that 1195 region. So a very clean cut play here in gold yesterday. All right. All right. So, those are the featured highlights on the intraday strategy page. I want to jump into some other pairs that we've been looking at on SB. I want to take your questions, guys. If you have any pairs you guys are looking at or want to do a quick breakdown on, feel free to throw it out. We can always do some on-the-fly analysis. So, Chintan was looking at sterling Kiwi right at yesterday's mark. I want to run higher, but Kiwi is a mess, not breaking 75. I completely agree with you with Kiwi being a mess. Quick look at Kiwi dollar. Look, I don't know what to do with this thing, guys. The broader bias remains bearish. That's just not my opinion. It's based on the momentum signature here. It's one of the most bearish momentum signatures I think of the majors at this point. I just don't have any validation to play it. Okay, you spiked back into the 2012 low day close. I thought that was going to offer some resistance. You made a couple of spikes above that. Momentum's still below 50, but the opening range for the month broke to the upside. And when you get these conflicting signals, guys, for me, it's just best off to sit back, guys. I mean, look, at the end of the day, this thing has 106 daily ATR. You're looking at a sterling yen with almost 200. You're looking at a euro yen or Aussie or some of the crosses, sterling key, with a much wider ATR. In a market like this, with so much headlines coming out every 10 seconds, I guess talking more towards the euro here, but even for the Kiwi, with the ranges so tight, it just doesn't make sense for me to sit here and try to squeeze out, 25 pips when I have setups across the board that are giving me much larger ranges. So I'm kind of neutral here on Kiwi, not really looking to touch it. Again, objectively, you do want to stay constructive above 74.50 from a scalping standpoint. You had the opening range set all the way until the 13th, so you had 2 full weeks of trade testing that key resistance. It is the monthly pivot. It is, the 2012 lows. We gapped right above it, and we've been sitting as that on support. So if I had to take a snapshot on this, not looking at anything, everything held constant, I would say, the 74.60 barrier would actually be your bullish invalidation level. So that's my problem with Kiwi. That said, Chintan, let's take a look at Sterling Key. I went over that yesterday here in the webinar. I still think it's a very nice setup. In fact, the rebound did gather pace from that major key support that we talked about, 203.60 into 203.30, a nice 30-pip range of support there. This is a longer dated 618 extension from the ascent off the 2013 lows. Okay, and then here you have a basic 618 retracement from the decline. Also note that the February opening range low was just pips higher, is right in this zone, but that came in right around 203.50, excuse me. So we were looking for a possible rebound, right? Momentum came from sub 40 above 60. That's shifting the momentum profile to the upside. It's the first break above 60 that we've gotten since way back here. You saw what kind of advance that led. So that put us back on the long side of the trade, looking for a high. The pullback here came right into support. And your major key resistance isn't still until 206.70, 206.50, this region here. So on the daily chart, that's the region I'm focused on. Here's what the intraday chart looks like, and it's much cleaner than the daily. So, Chintan, this is what I've been focused on. We went over this yesterday in the webinar. Divergence into the lows, followed by a trigger break. 9 times out of 10, I will take that position. Nice, healthy ATR. Quarter of the daily ATR is looking for 66 pips. Initial topside targets 204.40, 204.50. On this type of trade, you're in overbought condition. So I would have actually been holding this, looking for a stretch into that, with the move back below 205 taking me out. 205.20 here. So long story short, guys, you're looking still to defend this support barrier. I still think you could get a bounce higher, but at the end of the day, the range that we're focused on for Sterling Key is still going to be this 206.70 into 203.30. Huge range, but even bigger ATR. Even bigger ATR. Okay, you got slight divergence here at the highs. And remember, you're not looking at the wicks. Just go ahead and bring it into a line chart. And you can see slightly higher high, right? Slightly higher high, much lower low. So you could be seeing some exhaustion here near term. But my downside is appetite is curbed into that major key support from the daily chart. So I personally would still be looking to buy pullbacks here for Sterling Key. It's a good way to be short Kiwi without having to commit to a long dollar position. Okay. And who knows, if retail sales tomorrow from the UK blow out, you could finally get a nice recovery here into that 206.50 region we were talking about. Also note that 206.50 region from the daily chart is actually the weekly opening range high. So objectively, it's going to be a target here on the way up. All right. Chintan says, okay, cheers, Mike. Yeah, anytime, man. And also just keep in mind, okay, the bullish invalidation level is still this. So we're looking to play the rebound, but this is still going to be where we would invalidate the long side of the trade. So if you're newer to the scalp strategy in general, guys, or if you're newer to near-term trading, maybe not your ideal setup here. It does have a larger range, so the consequences, if you're wrong, are not really going to be felt as a scalp hit, right? It's a little bit bigger at 60 pips on the ATR here for a quarter. But certainly the levels, I think, are still pretty clean. Just want to see what this looks like. Bear with me one sec, guys. Could be the play here. All right. Hey, Stefan, great seeing the room. I said, sorry I'm late. Did you cover sterling yen? I did cover sterling yen. Let me know if you have a specific question on it. I can touch real quick on it again, but we did go over that. And again, guys, these are all archived, so you'll be able to review those as you see fit. He says, I will catch you on the archive, Donka. You're welcome, man. Here it is. Basically, listen, you're still against 84. Okay, as long as 84 holds as resistance, I'm looking for short triggers. I'm looking to sell against that range. Major key support and the bullish invalidation levels 180.90. I'm not looking to invalidate the broader upside. The whole premise of the idea here is just trading to this downside against this resistance, looking for a near-term recovery. I think we reinsert the long side again, heading towards the end of the month. So, I have a question here from Lubna wants to take a look at oil. Dollar CAD too. Yeah, we'll definitely take a look at both of those. So let's take a quick segue here to the oil trade. Okay, I tweeted this chart yesterday. What do I want to say on this? Listen, the monthly opening range is what has been in focus since the start of February trade. I know I'm like a broken record with this on crude, guys, but really it doesn't make any sense to start targeting above 54 or below 47, in my humble opinion. It just doesn't make any sense. You're best off selling into the 54 region. You're best off buying into the 47 region until this gives out. Now, what I was talking about yesterday, we added this here, was this formation off the low, okay, which sort of has offered some nice pivots with the median line. The lower median line parallel has been offering some support. In fact, yesterday, towards the end of U.S. trade, right after the close, I was sitting with the guys on the desk here, and the decline came perfectly into that median line parallel support and held. So you do have some opportunities to play, meaning if we break right here the lows from yesterday's U.S. trade session, this is also the low from Asia, then you look to play it back into the 47.70 region, okay? That would be the target. One thing I want to note is that every subsequent low since the opening range low, here's your February open, has been higher. So I'd start to curb my appetite to the south side. And in fact, one thing you might want to just tack on for your reference if you're trying to play the shorts is just a basic retracement. And if you add that on, some interesting levels are highlighted. Namely, I guess, it's the same 47 region of support, the 618. All right? So if you see a downside break beyond this, you could make a run to 48.90. I'd be looking, again, major key support here. Our base case scenario, guys, is that this thing does inevitably break above 54, give us a run into like 58, 65, and then turn around again. Again, that's just my personal opinion on the matter here, but I think that would jive really well with a near-term dollar recovery if we finally make it below that support on the dollar index. You see a nice little pop up higher. You could see gold do the same type of interesting recovery, and then it turns over again. So near term, that's the focus on this range. And until we break out of it, you just want to play range conditions. If you've been buying at support and selling at resistance, you've been doing all right since the start of the month here in crude. Okay? I don't want to put too much emphasis, guys, on the momentum signature on crude. They don't tend to be all that clean as far as trying to identify broader momentum by 60 holds and 70 holds. Crude is notorious for doing this little dance, sub 40, above 60, sub 40, above 60. So you don't want to necessarily apply that type of analysis here to trying to ascertain near-term momentum. Rather, just want to focus more so on the triggers themselves. Okay, so for example, give me 1 second here, guys. All right, this chart does not want to, there it goes. So something like this is what might be a nice trigger. If you get some divergence into lows, a topside trigger break, depending on where our price action is, that might be another opportunity to try to play the long side. But I don't really have too much commentary on this. who's this for? Lubna. You know, it's the same range that we've been in for the first week of trade. Is still what you're looking at. Here's what the daily looks like. And the one thing here that stands out to me is this trigger break. Okay. So again, you could see a scenario where you have a little bit more room to the downside to come into the opening range low. You get a break of this formation, a nice run to the downside, momentum comes into support, and then we'd look to reassert the long side there with a near-term trigger on the hourly chart or on the 30-minute. Lubna, does that help? Does that make sense on crude? It jives really well with the broader performance that we're expecting. Whoops, messing with my fibs. With the broader performance that we're expecting, not just on the dollar, but on some of the other commodity pairs that we're looking at. All right. So that is crude. By the way, a quick reminder for anyone who's new to the room, as we go through these webinars, guys, and as we go through all these charts, if there's any charts that you see on the screen or any analysis or anything that you'd like to keep, there is a camera button in the top right-hand corner of your GoToWebinar screen. You can always click on that and get a freeze frame of the chart for future reference if you need it. Lubna says, sure, thanks. All right. Dollar CAD coming right up. Oh, Dale, what says, Dale says, Mike, on the Sterling Key. On the Sterling Key example, 205.11, which place is a single pip, thanks? I'm not sure what you mean. Oh, so, I mean, a move from 205.11 to 205.12 would be a single pip. Is that what you're asking, Dale? I hope that's... Okay, cool. We're on the same page. Right on. So, moving along to dollar CAD. Well, it's an opening range break for the week to the upside, and I'm not really sure I necessarily want to entertain that idea at this point because I do have us at near-term resistance. So, here's what we looked at yesterday with the dollar CAD. Again, this is... I'm not sure why that circle blew out like that, but this is the range that we were looking to play into right here. This is a nice 100% extension off the high, a basic 236 of the advance as well, a longer dated 786 from the decline. I'm not going to stress that so much, but they all line up pretty well in this region between 204.50 and 122.50 and 122.80. I'm talking too fast for my own good. Sorry, guys. So I have us at resistance. It's an opening range break for the week to the upside, but I have us at resistance. So I'm not sure I'm going to do anything here. If anything, I'd be looking near term for short triggers, but here's what the dollar CAD looks like on the 30-minute chart. All right, so not only does it look like, well, I have to adjust this a little bit. Sorry about that. To account for that low. Not only is this a break above the opening range high for the week? Here's your weekly open, right, which prompted a nice move there, but it's also the 38.2. So at this point, I'm very cautious of any type of long exposure in this region. I'm going to go ahead and remove this 50 just to clean this up. And we'll mark this near term as our bearish invalidation level. All right. So we'll see if this thing offers any plays to the downside here on a nice short trigger for momentum, especially now, guys, because the opening range for the U.S. is going to take place right below this resistance. If we get a push higher here into the 8:30, into the 9:30 open, you see maybe a 9:45, 10 o'clock break to the downside with a trigger. And I think that's a very nice play. You look to play it back into 124.90. You look to play it back into, I guess, the Sunday initial opening range low. It's too early to do this, but just as a quick drill, when you do have these type of plays in price action, let's say you do get that short trigger, tack on a quick retracement. Tack on a quick retracement. We'll open up that support region into 24.80, 24.90. And then right ahead of that level I just noted right here, you have the 618 at 24.35. So again, I don't have enough confirmation to call this a high yet, but once I do get that trigger to the downside, that's the retracement taking into consideration. So you haven't really seen gold and CAD, move in tandem very well. So I wouldn't necessarily, I'm only saying this to you, Lubna, because it seems like you asked most of those questions back to back. I wouldn't necessarily want to make those corollary plays, right now, okay? You've seen diverging price action over the last couple of days, so I don't want to necessarily stress dollar CAD bias, okay, with what crude is doing. So just a quick note on that front. But the long side is at risk below this region. I actually would start looking for some short triggers up there. Okay. So that is dollar CAD. An interesting CAD pair that I've been looking at aside from dollar CAD is also Aussie Cad. If you guys remember, we wrote about that last week. We've been following that one for a couple of weeks, I guess, since the start of the month, since the run into this key support. Look, that rebound off of the 96.30 region, 96.50 key support, that rebound now testing a basic trendline resistance off the yearly high. Don't have any plays on this one per se. On a turnaround story in the Aussie, I think you get a nice play here, but here's what the intraday looks like for Aussie Cad. So this was actually a break yesterday of the weekly opening range high. We came back, kind of a messy defense of that high, but it did hold momentum since the start of the week. And this is something that kind of irks me a little bit because you've seen that 40 hold as rock solid support. In fact, most of the turns ahead of 40, but you didn't get that upside bias to really give you a play until late in the week. I mean, this was obviously a clear-cut move here, but long story short, this is the resistance range I'm focused on near term. Again, this is a 38 from the decline. Yes. So similar to the dollar CAD, that's my near-term bearish invalidation here for Aussie Cad. And in fact, let's just see if this offers any guidance. Yeah, looks pretty good. Looks pretty good. So, as we head into U.S. trade, you're looking for possible short triggers up here in momentum. Again, when you're doing this, guys, you want to jump obviously into the much closer time frames. Or on a topside break, you look for a pullback into that same region to attack the longs, looking for 98.35, looking for 98.90 on the upside. Be mindful of that median line, by the way. But that's sort of a quick outlook here for the Aussie CAD. Again, another alternative to trying to play necessarily dollar CAD, which in my mind is a little bit hairy still up here. DB, great to see you in the room, says Euro Yen and CAD Yen and SPX or DAX, please. You got it. So Euro Yen, I know, very popular trade. I don't like the daily setup, which is why I can't really get behind this. The intraday chart looks super clean with the rising formation that we're in right now, but on the daily chart, the only thing I have really mapped out, guys, is 134 as key support. Those are the lows from October and the pivots that we made here so far. 136.60 as resistance. That's also the opening range high for the month. And from the daily standpoint, I just don't like what price action has been doing, which is why when typically the daily chart doesn't have much clarity for me, I tend to shy away from those setups. We should, I guess, clean this up at this point and tack on that quick retracement off the high. Okay. But that said, here's what the intraday chart looks like, and this is why I'm a little bit more comfortable with this. See this ascending channel formation or median line formation here? It's actually been reacting really well. And to open up the week, the first thing we did was run right into lower median line parallel. On that run, okay, you had some beautiful divergence in price. Actually wasn't all that divergent, but nonetheless, the break back above the 30 level. In any event, took us through the opening range high. That double backed, so the long side got invalidated with this break yesterday back below 35.50. And I just feel like you're going to get chopped up in this. DB, it's just, for me, the euro in general, it's just not worth it. It's just not worth it. Guys, here's just a quick, just to give you an idea from the trade desk side. Here are what the hot topics are as they were. So this is a menu that actually brings up just the most widest array of, or the largest profile, highest rated sort of messages from Bloomberg. And if you just look over the last 24 hours, it's been ridiculous. EU says Greek letter may pave the way for a reasonable compromise. An hour later, Germany rejects Greek extension proposal, Finance Ministry says. Ahead of that, I mean, it's just going to be a plethora of news headlines. And when you're trading something like that, it just doesn't make sense. So for me, guys, it's just not worth it for me to be trading any of the euro crosses right now on account of that. These are all messages, guys. These are all just market reactions to headlines. So on something like that, I don't know, I feel like you're reducing your profitability here by just trying to trade something that's just way too popular. So at this point, I highlight this region. If we break below it, I do think that the trade does turn bearish. That's my bullish invalidation level. As far as trying to play the upside, I'd need a pretty compelling momentum signature to try to do that. It does have a healthy range, but with that type of range, I'd still rather be looking at the sterling crosses, sterling key, sterling yen. The euro crosses just aren't doing it for me. Dollar yen looks like this. I see a question from Lubna on that. DB, I will come to CAD yen as well, but we might as well cover dollar yen first and foremost. Here's what the daily chart looks like. Again, a little bit of a chop fest here, just holding above that 118.19 level. Remember yesterday in the webinar, guys, that's still what I need to break, and that is my bullish invalidation level near term. So if we go south side of 118.19, I'd love to play the shorts. Initial targets would be just the monthly opening range low. It's like 116.80. But really, 116.15 print is not all that's out of the realm of possibility. And in fact, remember last week when we broke this trend line and everyone's saying, oh, the formation is broken, dollar CAD, or dollar yen rather, let's shoot for 123 at this point. Well, on that breakout, look what momentum did. That's a straight 60 bounce if I ever seen one. Okay, so it's just not there yet. It's just not there yet for me to play the continuation on the longer, broader dollar CAD ascent, right? That said, I'm personally looking for another pullback. It just hasn't materialized yet. Here's what the intraday chart looks like for dollar CAD. You set a Tuesday opening range. That didn't do anything. We're still trading in that range. I'll give you a little perspective here by zooming out a little bit. There's some symmetry to it. She did get a trigger here yesterday, or an overnight trade, I guess that was. When was that? Yeah, right this morning at 4:30. That was a beautiful trigger. Remember the session opening ranges, guys. So here's the open of European session, right? You swing into a low. That trigger broke on the upswing. It's a long situation against the lows here. Looking for, I just added that trend line, so I would have been looking for a run into this 119.30 target. But now that we've added that, makes sense. So dollar yen, not something I'm interested in trading either right now. 28 pips of the daily ATR is still pretty tight considering the other pairs that we're looking at. I still think sterling yen's a much better bet. If you're trying to attack yen weakness on the long side, if it breaks above that 184 barrier. But even that right now is right at resistance. So the cross is really what I'm focused on. The dollar is just not doing it for me right now. Look for a little breakout of this consolidation feature here. Okay, so these are levels I'd be working with. I think the levels are actually pretty clean. There's a lot of chop, but it's dollar yen, guys. The abomination is the reason we call it that. I'd be more favoring, again, a hold near these levels and a break below. Like I said, 118.19. We need to get below that for me to start favoring, a little bit more of a conviction trade towards the 116 levels. But as long as we stay in here, I mean, if you guys want to trade the range, if you're really near-term scalper, there is plenty of opportunity. It's just, it's pretty tight. It's pretty tight. Can you explain the quarter of the daily ATR, how to use that, Chintan? Okay, so Chintan, you can get this app. It is called ATR in Pips, or ATR Pips Indicator. It's on fxcmapps.com. And all it allows you to do is, instead of having the oscillator at the bottom for the ATR, it allows you to put it in print, and you can put a multiple of it. So typically, Chintan, per my scalping strategy that you'll see on the intraday page, typically per scalp, I'm looking for about a quarter of the daily ATR. So if you're putting in 100 pips on a daily basis, per scalp, you should be looking for about 25 pips per trade. That's just based on, common sense. There's 4 major trading sessions around the globe. If you're intraday trading, you're not looking to time span across multiple sessions. So for me, I'm looking for that humble quarter of the daily ATR. Now, that doesn't necessarily mean that's the limit that we'll take on all trades, meaning, Chintan, like on a breakout type of position, dollar yen obviously is a horrible example, but let me just show you, for example, last week's Aussie scalp, because we got some nice setups on this one. On the breakdown of the weekly opening range, right, you're looking for about 27 pips per scalp. So let's say you broke the weekly opening range here, you took the short. The first 27 pips, yeah, I'm doing something. At every quarter ATR attained, I'm doing something. Taking something off the table, bringing your stops back to break even. You can still hold on to the trade if you want to try to push through, if you have the momentum conviction. And on a trade like this, you let it ride at the next 27 pips. Okay, so that's, 54 pips total. Then we look to take something else. Take another quarter of the trade off. Bring the stops down to your previous resistance target, right? But at every quarter ATR value attained, so every 27 pips, if you're blessed on a good trade, you're doing something. You're doing something. That's because that's my target. If the 27 pips is attained and I'm getting greedy and the market comes for a full retracement, the scalp is completely null and voided, right? You have to remember, guys, on a strategy like this, we're placing a high volume of trades, right? So if the trade comes into your initial target and you just bring your stop to break even, you're doing yourself a disservice. You were right on the initial scalp. 27 pips is what we're looking for. Boom, do something. Take something off the table and bring your stops in. As a disclaimer, I'm never, repeat, never taking something off the table and leaving my stop in the negative. If you do that in the long run, guys, your broader performance per scalp starts to go negative, because as you take off a quarter of the trade, you're getting stopped off that, so that becomes a net flat trade. So every time you take something off the table, you need to be bringing that stop in. It doesn't make sense unless you do both of those in tandem. So just a quick note there. I hope that helps. How do you get the app into MarketScope? Mike DB is asking. So when you go to that website, you just download the file, hit I, okay, on your charts to bring up your ad indicator, and then just hit import and select that file. Okay, and it should be installed right there. General newbie question, any value to drawing trend lines off the open close versus tail levels? Stefan, a question, my friend, that you could put 2 technical analysts in a room and they will duke it out on that forever. Listen, it depends on what you're trying to do. If you're a longer-term trader, you're literally in the positions for weeks or months on end, a lot of times it's going to be in your best interest to use the closes. In fact, it's not necessarily using the closes. They're just simply looking at the line chart, because they want to see, their targets are not going to be necessarily based on the highs or lows. This is what they look at when you're looking at really long-term positioning. They just want to know where the close of each session was. Okay, so if that's your type of analysis, sure, that might be better off for you. In my years of experience over the last 10 years, I've just, there's so much information that I want to know what the extremes are. And because I'm intraday scalping, okay, those are the levels that matter to me. So does that make sense, Stefan? I don't know if I've gone off topic there. If you're asking me personally, Mike Boutros, I'm always going to be using the tails, okay, because I want to know what the extremes in price actions are doing. Longer-term guys, again, guys who are taking positions for months or weeks on end, they just want to know what the close is. So for them, their analysis will be more heavy on the close price. Stefan says, right on, thanks. Cool. He says, great answer. Cheers, mate. Chintan says, so if I look for 27 pips per scalp, then my stop should be less than 14 for 1 to 2 risk reward. Is that right? Chintan, this whole concept of 1 to 2 risk reward is not something that we work with here in scalping, right, in intraday trading. If you try to do that, yes, it's great to have a 1 to 2 risk reward. It's great to have, a 1 to 9 risk reward. Objectively, you can't do that. Okay, you can't do that. If you're going to put a 14 pip stop, it's going to be a hard life. Okay, because I can tell you from someone who is very, very adamant about using a proper risk to reward. In general, if you put your stops that tight, it just becomes very, very difficult because you tend to get stopped out multiple times. So we will generally, and I say this loosely, generally work with a 1-to-1 risk reward. Listen, anytime you can improve your R&R on a trade, I'm right with you. Okay? Anytime you can improve it, go for it. But if you're looking for intraday trading and you're looking for a target of 27 pips, you put a 12, 13, 14 pip stop, it becomes very frustrating. Add to that the spread, and you're basically looking at a really, really tight entry. I mean, you've got to nail the entry right on, right? So I typically will work with about 1-to-1, typically a little less than 1-to-1. So if I'm looking at attaining 27 pips, I try to get it to where I can get a stop 25 pips, 24 pips in. And that's really based on the setup. So you bring up a good point. If you're jumping into a position and the acceptable stop is not at least 27 pips inside, then you just can't take the trade. Sometimes I'll get someone saying, Mike, it was a beautiful trigger. We just cleared the highs, but the low for the session is, 30 pips away. What do I do? You do nothing. You do nothing. It's all about the setup, guys. So if I can't put a stop that's an acceptable distance in comparison to the limit I'm looking to take, it's simple. It's just not a trade you take. Okay? The market will provide. There is always going to be another opportunity. I'd rather forego a possible opportunity than try to press a trade with an improper risk to reward ratio. So Chintan, sorry, I went on a little tangent there, but I hope that offers some clarity. He says, that's what I'm thinking, because if I try to do it, he says it sucks when you keep getting stopped. I hear you, yeah. Anyways, thanks for the inside, Mike. You're much appreciated, Chintan. You're more than welcome, sir. All right, great questions here today, guys. This is good. I'm sure there are other guys in the room who have the same questions you have, so feel free to throw that out. Just wanted to note a quick setup on copper. I tend to go through the commodities every day, and by the way, here's a quick look at what the broader commodities are doing. NYMEX crude today off about 5% so far. You have spot gold pretty much unchanged. This has been a nice mover this week in general. If you look at the 5-day performance, still down almost a percentage point here. Okay, and copper, 1.69% up on the upside today. Here's what that chart looks like. It's really interesting. The reason it's interesting is because of the region that we're trading into. So 262 defines the monthly opening range high, a 236 retracement, this week's opening range high, and it's just ahead of the median line bisector off the highs here from, from 2014. So big region of resistance, big region of resistance. Honestly, if this breaks through, I don't have anything until right up here at 275, excuse me. And the R1 monthly is just above that. So I would highlight this region as the next objective if we make it through. On a dollar weaker story, you can envision a scenario where the dollar pulls back and you get a little bit of an upside swing here on some of the commodities. So something to be on the lookout. Not necessarily ready for a trade here. Specifically, the conviction for the topside play would happen if you break 50 in momentum. Guys, we haven't broken 50 in momentum. This was a very short-lived break, but we haven't broken 50 to the upside in momentum from an oversold territory since here. Okay? And while that one did see a nice break, it pulled back, it was on the onset of a larger upswing into the 2014 highs. So we could be making a nice little near-term recovery here. It's too early to tell. The bottom line, focus on this 265 region for a topside break. And I think if you do get it, we'll look to play that into 275 here, 275, 274. On the flip side of that, you have a very clear-cut momentum trigger. Okay, so if you see momentum hold 50, break to the downside, your stops need to be against these highs, and you look to play the recovery near term for copper. Okay, so at a turning point, major key inflection here near term on that trade. All right, so guys, those are the setups I wanted to cover. Let me just make sure I got everything. Sterling yen, sterling dollar, Aussie gold, crude, copper, Aussie Cad, dollar Cad, sterling key. Those are all the ones I wanted to review. Let me know if there are any other pairs before we bounce here that you would like to get on a quick look. Brian, he wants to look at dollar Swiss. Really, man? I guess we can look at dollar Swiss. I don't, I'm still not really a fan of trading Swissy in general. I think, despite the fact that it has been a couple of weeks now, guys, almost a month since the monumental move on January 15th, which really was the largest FX move we've ever seen in history. I still think the dust necessarily hasn't settled to the point where technicals are really going to be relevant enough for us to take a conviction stance. That's just my personal opinion, Brian. I don't want to shake you out of the trade, but, man, what are you looking to do here? I mean, you tell me what you're looking to do, and I'll tell you if it makes sense from my standpoint. I just don't have reference levels to take any fibs. I don't have Jamie was looking at an hourly channel to short. Let's do that. Let's bring that in. And again, guys, don't let my bias, my hesitation, shake you out. I'm just being completely frank with you guys on my own opinions on the matter. Okay, so this chart hasn't been updated for a while, so just give me 1 second here, Brian, and let me see where these levels are taken from. Okay, so this is actually null and void right now. Let's take the monumental drop. I see what you're talking about, Brian. You actually are coming into 6.8 of the massacre, we'll call it. 94.98. Not bad. That's nothing. That's the October low. Guys, bear with me just one moment. I'm just going to tack on some stuff here and see how this looks. Is there a 2618? We just broke the 1618. Okay. Yeah, I'd be watching, just call it 95 at this point. Let me clear out some of these trend lines here. Trend line support. I guess from this one, on the near-term approach, you really just want to focus on that, I guess it would be from here. Yeah, this looks most sense. Oh, Brian's saying 130 low, 25 high, 26 low. Jamie, my man, he's got such a good eye for these. Right on. Yeah, I see it. I see it. Listen, a couple things. I don't know what 38%. Oh, that's because the ATR was so tight. Let's take this back to 25%. I remember I was doing that for someone in Daily FX on Demand. They were hell-bent on trading it, so we opened up to 38%. So you're looking at 30 pips per scalp is not that bad. Nice divergence into the highs. Remember, when these divergence signals are on either side of the extreme, meaning one above 70, one below, this is not technically below, but those are typically very strong signals. So I do see the sort of call here for a pullback. Makes a nice channel, and hell yeah, he does, says Brian on my man Jamie, right? Yeah. Let's do this. Let's bring this into the 30 minutes. Is there an even opening range I can work with here? All right. So, guys, it's 9:30 on the mark. Markets are just coming online. This is the opening range for U.S. It's super tight, so I don't necessarily call it an opening range break because you didn't get much of a defense of the lows, but you did get a defense of the highs. It looks good, Brian. I don't want to say it doesn't look good, man, but for me personally, it just doesn't have the hallmarks of the things I need to trigger a position. I agree with you that the trajectory from here is looking for another pullback into at least the median line near term, so down here. But I just don't have a trigger that would put me in. I don't necessarily have anything that's a conviction push here, even from the 5-minute. There's just no triggers. So we'll see. I do like the setup, though. I mean, I like the levels at least. Thanks for bringing that up. Definitely see what Jamie's looking at here. In fact, you probably just want to tweak it a little tiny bit, and you have it coming off resistance right now. Might be a nice play. Might be a really nice play. In fact, till what was this? Yesterday. Till yesterday, there was nothing going on here, right? There's nothing going on here. Finally, get a nice stretch into that 618. So use this near term as our bearish invalidation level. So if we do break above that, you kind of want to abandon the short side or even the search for any short triggers and momentum. That kind of scenario, you're basically looking for I'd be looking for 95.55 here, the lows that you made back in December. Really nice pivot, actually. Wow. And I just wish we had a more prominent high-low type of structure to take, but I definitely see the reasoning behind it. Not bad, Brian. Thanks for bringing that up, man. Right on. Sometimes I get stuck in my groove of, oh, I hate this currency, so I just want to look at it. So it's good because sometimes you guys bring up pairs that we would never typically look at. And it's a win-win for everyone. So, guys, feel free to throw out any last-minute questions. I am over on time, but always got the time for you guys. If you have any other questions, feel free to throw them out. Otherwise, here's what we're looking at for the economic docket moving into the end of the week. Obviously, like I said, tomorrow's retail sales print out of the UK is going to be the major read I'll be looking for, specifically with the scalps that we're focused on, the sterling dollar, sterling yen. We'll be looking for that. Retail sales out of Canada also released on Friday, so it's something that would take an effect on some of the pairs that we were looking at, specifically on the Ozzie Cad or even the dollar Cad here as we continue to hold that near-term resistance. So that's something that we'll be focused on heading into the end of the week. This is going to call it for the rest of the webinars on SB until Tuesday, 8:30 Eastern. We pick up back up with the intraday strategy webinars Tuesday through Thursday. Obviously, Jamie will be on board on Wednesday at 1 p.m. Also, keep in mind, guys, just a quick reminder, as we head into the end of the weekend, you are going to see some, we will be doing some updates to SB Trade Desk here as we get close to launch. So there's going to be an update to the SSL certificate. If any of you experience any problems logging onto SB Trade Desk, please just go ahead and clear your cache, and it should resolve the issue after we update the SSL certificate. So that should be done as we head into the end of the week. As always, your feedback is welcome, guys. info@sbtradedesk.com. Feel free to throw us any feedback that you do have, good, bad, ugly. We're more than interested to know what your thoughts are. With that, I'll go ahead and close it up. Guys, have a great weekend. Keep in mind, I'll keep you updated on the squawk as far as tomorrow's event risk is concerned and any impact that'll have on the trades that we're looking at. Till then, best of luck trading, guys. We'll see you on Tuesday. Cheers.